It's like you are driving in a tunnel and the tunnel is only getting longer and longer and darker and darker. And there is no idea. I mean, no matter what, say for last 13 years, myself and every other manager in my shoes would have been saying we are going to come out of the tunnel. There is light at the end of the tunnel. But abhi 13 saal nikal gaye or light at the end of the tunnel is not visible. So either you can give up hope that there is no end to the tunnel. So I'll discuss that. And possibility that there is some end to the tunnel. And when it is like they say, it's darkest before dawn or darkest when you are deepest in the tunnel.
Indian economy. In your presentation, you also stressed a lot on your risk management. So, given the fact that over last 10 years, India's corporate earnings have been coming down, and earnings to GDP ratio is down to almost a lowest number over last 2 decades.
Right.
Government debt to GDP ratio is kind of peaking to days of 1980s. So which basically implies government cannot do much spending here on. So given the fact that GDP numbers have been coming down, debt to GDP ratio has been going up, the corporate profitability to GDP ratio has been at 2 decades low. We know that theoretically, given the past performance over long term, there is a case for alpha. But what is in front of us, at least in the recent past, is not throwing that. So what are the drivers that you believe are going to change this entire scenario? And what are the risks that you see which may still be there that investors be cognizant of? And obviously when one is investing in equity, one understands one is taking risk. The focus more has to be on return. That's absolutely right for long term, but I want you to cover both drivers as well as elements of risks.
Certainly. No, good question, Kamal. Let's go to the next slide. Yeah. Raj, the slide after. Yeah. So what you said is very true, Kamal. Last 13 years, from FY08 onwards, March 2008 ke baad mein, the earnings growth has been very pathetic in India. Everyone, including myself or ourselves, have been wrong on economic growth projections as well as earnings growth projections. Right? The economy has grown in nominal GDP terms at about 10 odd %, still double digit, but corporate earnings growth has been only 5%, which is fairly poor. All right. Long-term earnings growth in India, if you see since early 90s, has been 11.5%. But last 13 years has been only 5%. And that one of the reasons you cited on the lower left-hand side, corporate profitability has gone down from a high of 7.8% for the year ended March 08 down to 3% right now. Right? Longer term average is 5%. So there are two ways of looking at it, or multiple ways of looking at it. As you were saying, and I was thinking of an analogy. It's like you are driving in a tunnel and the tunnel is only getting longer and longer and darker and darker. And there is no idea. I mean, no matter what, say for last 13 years, myself and every other manager in my shoes would have been saying we are going to come out of the tunnel. There is light at the end of the tunnel. But abhi 13 saal nikal gaye or light at the end of the tunnel is not visible. So either you can give up hope that there is no end to the tunnel. So I'll discuss that. And possibility that there is some end to the tunnel. And when it is like they say, it's darkest before dawn or darkest when you are deepest in the tunnel. जो भी सोचना है वैसे सोच सकते हैं. But let's assume that it remains as bad as it has been over the last 13 years. It can also get worse, no doubt. कुछ बोल नहीं सकते. But last 13 years has been very challenging. So if it remains as bad as it is, और 5% earnings growth है, तो भी अपना market return ने 7% market return आया है. Right? Our portfolio return over the 13-year period has been closer to 17% because of 9 to 10% outperformance. तो अगर in a very challenging environment of the last 13 years, you're able to extract 15-17% return, 16-17% return, that's very good, right? If things remain so challenging, then there is still, a good. Let's quickly go to slide 59 and come back to this slide. Last 3 years, mein, because I can share the last 3-year returns. As we saw earlier, market return has been only 3.9%, right? Which is more or less in line with earnings growth. But our team's return has been 14%. So we are going deeper and deeper into the tunnel. It's getting darker and darker, still 14% return in market giving 3.9%. So agar, now let's go back to the prior slide again. So agar we are still able to generate, because the companies, the market's earnings growth is 5.1%, right? Or cash flow growth is 5.1%. There are other companies which are doing much strong. They're within the market. A market is an average. The companies that are doing far poorly and companies are doing very, very good. And it's an inefficient market, mispriced opportunities, and hence you can still generate very strong returns. Now, if things eventually do return back to being good, remember, in the several people on the call might remember the 90s में ऐसा लगता था इंडिया का कोई फ्यूचर ही नहीं है. वो हर्षद मेहता स्कैम होने के बाद में प्रोलॉन्ग्ड पीरियड के लिए बहुत खराब हालत थी. जो इधर you can see this here on the screen what I'm saying. If you see on the top chart, the period between 93 to 96, there was 45% earnings growth year over year. Annualized 45% earnings growth, followed by 7 years of 1% earning growth. One only. Call it zero, right? There was a 5-year period of 25% earnings CAGR. By that time, by 2003, everyone had given hope. And that's why the best bull runs in our lifetimes has been 2003 to 2007. Because 2003 में March 2003 तक सबने hope छोड़ दिया था. There was no earnings growth, right? And then 03 के March में the Sensex was at 2,800. And Jan of 2007, Sensex was at 21,000. More than 7-fold jump, right? Because the earnings compounded 25%. Now, patience is getting tested, no doubt. That's why people are running to invest in the US. 13 साल हो गए सिर्फ 5% earnings growth आया है, right? But there will come a time. We can't, like 2003 में किसी को पता नहीं था कि 5 साल इतने अच्छे हो गए बाद में. When the market went back to 6,000, people sold out in 2004-5 because 6,000 was the peak of TMT bubble. 2000 तो बोला अरे ऑल टाइम आ गया बेच दो. 5-6 हजार में बेच दिया, वहां से मार्केट क्वाड्रुपल हो गया. So similarly here, nobody knows when there would, अच्छे दिन कब आएंगे वो पता नहीं, but अच्छे दिन आएंगे आगे पीछे चल के. As they have come in the past, we are in a somewhat prolonged lull, no doubt. Maybe the bull market that comes next time would be a prolonged bull market. We don't know. But over time, everywhere in the world, generally speaking, you can always find some exception somewhere, but generally speaking, corporate earnings growth is in line with nominal GDP growth. आप यूएस का, यूरोप का, कहीं का भी उठा के देख लो, पिछले 100-50 साल का, 100 years, 50 years, whatever, corporate earnings growth would be in line with nominal GDP growth. And market returns are also in line with that, plus dividend yield, which is 1 to 1.5%. So nominal GDP growth rate worldwide is roughly been 4 to 5%, and hence why returns have been more like 5 to 6% return. In India, nominal GDP has been double digit over the last 30 years, has been 13 to 14%. And that is why if we go to slide number 42, expand this way. On the left hand side graph, if you see, the returns over the last 35 years has been 15% in Indian market. अभी ये साल का ऐड करके भी 14 से कम नहीं हुआ होगा. And that is more or less in line with nominal GDP growth rate, because inflation itself has been 8%. Real GDP growth rate has been 7 to 8% inflation over the 35 years, and 7 odd percent, real GDP growth rate, and hence about 15% nominal GDP growth rate, which is a return. Going forward, let's assume real GDP growth rate would be 5% to 6%, right? If you are more pessimist, take it 5%. अगर और pessimist है तो और कम कर दो. Last 20 साल का 7% रहा है growth, तो 5 to 6, 5.5 seems reasonable to assume for going forward. And you assume inflation in India to be close to 5%, because it's a democracy ultimately and still a developing democracy. Inflation doesn't matter, that's a pass through. डॉलर टर्म्स में वो ज्यादा इन्फ्लेशन आएगा, कम इन्फ्लेशन आएगा, वो उतना डॉलर में एडजस्ट हो जाएगा. तो करीबन 10% नॉमिनल जीडीपी ग्रोथ, 10 से 11% आप ले सकते हो नॉमिनल जीडीपी ग्रोथ रेट इंडिया में. एंड सिमिलर वुड बी द कॉर्पोरेट अर्निंग्स ग्रोथ. एट अ पॉइंट ऑफ डिविडेंड यू शुड गेट 10 to 11% market return over time. And our objective is to extract 10% outperformance from that, which we still think is doable. It has been doable over the last many decades, and it is doable going forward as well in our view. It's not easy. It's easier said than done, but it is doable, and that is the goal. So tunnel pessimism or whatever you say, this is impossible to forecast. Kab economy niklegi from its mess that it is, if you will. Obviously, all these projections, I can't add much value to what everyone already knows about the economy and all that, and the market is fully factored that in. So many people say, hey, so much is going wrong, how come the market is rising? Market doesn't reflect the current state of economy. Never does it reflect necessarily. If it is in line with current state of economy, it's coincidence. Market's always projecting, looking beyond the horizon. Market goes down well before people realize there is trouble coming, and market rallies well before people realize there are good things going to that are down the line. Market may be wrong and will correct itself there, but market's always looking beyond horizon, beyond what investors can see. Like 2009 mein, everyone was convinced US is in bad shape. It is the next Japan. Next Japan bole to kahin nahi, it's not going to go anywhere for many decades to come. Some macro guru also said that long-term value of dollar is 0. And for last 11 years, market rallied. In 2009 onwards, rally hone lag gaya. For till now, many people say that it is ahead of itself. For 11 years, they've been wrong. The market could see well ahead of what any of these macro gurus could see. And hence, over the last 10 years, US has been the best economy, best equity market, and the best currency.